Let's talk currencies now with our colleague Patricia Wee joining us now in Singapore. So Trish, what's the level of risk appetite into the markets today? Because we're seeing the yen rise against the euro for a second trading day.
Oh, well, Kathy, the risk appetite remains very strong as we head into the end of the first half of the year. We've had pretty good encouraging numbers again last night with the U.S. stocks up as well. So the Asian currencies and high yielders are continuing to rally, especially commodity currencies. We see that in the Australian and the Kiwi dollar. In fact, they were both stronger against the yen this morning, especially after the Japanese numbers that came out earlier this morning, which actually showed that household spending has actually surprised on the upside. Yes, jobless rate has continued to rise, but that was expected. But the surprise factor was actually the household spending. So that can continue to feed some risk appetite as well. It kind of sets the tone for a pretty encouraging Tankan report tomorrow in Japan. For the rest of Asian currencies, they're taking the cue from the stock market and the encouraging close on Wall Street last night. So yeah, I think traders are expecting a pretty strong end to the first half of the year for Asian currencies.
Yeah, I was just going to correct myself. I meant to say that the yen's falling to a two-week low against the euro because of those higher risk appetites. But what about when it comes to the Chinese yuan, Trish? We're getting news that China is planning to allow yuan a settlement for trade in Hong Kong. What sort of implications are traders deriving from this?
Well, the move was not surprising as China has signaled many times that it wants the yuan to have more presence in Hong Kong and to eventually play a major role in Hong Kong. In fact, it's been seen to a lot of the logistical and technical areas already. There are two implications here which traders are deriving from. First, that Hong Kong is actually increasingly moving closer towards revising its peg to the yuan rather than to the US dollar as of currently. In fact, some people say that that may be one of the reasons why Beijing allows the yuan to track the US dollar far more closely than other major currencies. It's just so as to help it align itself with the Hong Kong dollar to pave the way for an eventual conversion of the peg. Actually, both currencies have stalled against the dollar as this year they're pretty much flat. Well, the second implication is that it will be consistent with China's broader plan to reduce reliance on the US dollar as part of the BRICS stance. It's also a move towards a full convertibility of its currency on the global financial markets. Although people say that it's not going to happen so soon, definitely not in the next 1 year or 6 months. Traders expect that it could actually happen sooner than most people are expecting. A lot of people are expecting it to be a full convertibility. Could be like 5 or 10 years down the road, but some people actually say it could be far sooner than that. Kathy?
It's going to come, but we just don't know when. But what about when it comes to the quarter just ending today, the final day of the quarter and the first half of the year? What is the scorecard like for the Asian currencies, as well as the commodity currencies that you mentioned earlier?
Well, let's start with the Asian currencies first. For the last 3 months of the year, Kathy, it's definitely been far better for a time for risk currencies like Asian currencies, high yielders and commodity currencies compared to the first quarter. For Asian currencies, aside from the yuan, Hong Kong dollar and the peso, which have been pretty much flat, the rest of Asian currencies are up across the board. This I'm talking about the second quarter. Indonesian rupiah is the biggest winner, a 14% rise, followed by Korean won and Indian rupee. They both rose about 8 to 5% respectively. But year to date, they haven't fared that well. Of all the 10 most traded currencies in Asia, all these 3 are up against the dollar, and of these, only the rupiah deserves a mention. It gained about 9%. The rest, the other two, baht and rupee, are just up about 1.5 to 2%. So it goes to show traders are saying that Asian currencies still have a lot of catching up to do. They managed to erase a lot of first quarter losses, but they're not really up that much on the year. Commodity currencies, however, the gains have been far more impressive on the back of the global recovery story. The Australian dollar is up 15% and the Kiwi dollar up 13% for the year. And in the second quarter, they've had the best 3 months since 1985. They both sold about 17% each, thanks to the global risk appetite recovery. Back to you, Kathy.
We haven't seen a gain like that in the Aussie since 1971.
80.
We were born then, weren't we?
No, we were not.
Thanks so much, Trish.